Good afternoon, everybody, and welcome to this afternoon, session 31, here on Monday, 18th of March 2019, where we have the next session of the Admiral Markets webinar series, Mastering the 4 M's of Trading. My name is Paul Wallace. I'm your guide through this series, and as always, we'll look to begin with a quick risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying videos for information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by Admiral Markets Group investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients could still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK receive a compensation of account deficits with a maximum payout of £50,000 sterling as per our negative balance protection policy. There are many reasons to trade with Admiral Markets, and in particular, you can see that two of their most popular instruments, the DAX 30 and the Eurodollar, have very, very competitive spreads during the main market trading hours. They also provide the MetaTrader 4 and 5 platform with their own Supreme edition that can be plugged in and used. And if you want to know more about that, please contact your account representative. Admiral Markets is also a global brokerage with locations in both Australia, in Chile, in Cyprus, and in the European Union. And if you speak to your account representative, they'll be able to guide you to select the best environment for yourself. So, as always, ladies and gentlemen, here we are, 4 M's of Trading webinars. Expectations for our sessions, as always, is for me to educate you about the 4 M's of trading every week, help you to be able to go away and begin to analyze any market and be ready to trade it, and then also to help you raise your self-awareness about managing risk and about managing yourself. For yourselves, ladies and gentlemen, I just ask that I appreciate we have a broad range of experience in the room. As always, I'm operating under a time limitation of about 40 to 45 minutes, which means I'm limited in the depth of topics that we can go into. But what I always hope to try and do is to focus on sort of the tools and the tactics that you can take away and utilize tomorrow in your own trading. Most of you will know, ladies and gentlemen, now if you've joined us over the preceding sessions, is that the 4 M's of trading is about making sure that you understand, manage, and also master markets, method, money, and myself. Because when you are in charge of those 4 M's, that's when we sort of have that sweet spot where we tend to trade to our best abilities. And if you're going through a challenging period, well, then it becomes a question of which one of those 4 M's is a little bit out of kilter, because once you identify that, well, then you're able to sort of dig in and start to find some tactics to help solve you with your particular challenges. But throughout the whole of this series so far, we've taken turns focusing on different elements like markets, method, money, and myself. Today, we're going to sort of continue on from our session last week. We're going to be just looking at a little bit of markets today, and we will dig more into that as we go through the session. So remember, ladies and gentlemen, I always want to go through our, let's say, our first 10 steps, because, you've heard me talk about the importance of having your own processes, your own routines. These are the things that embed good behaviors in your trading, help you develop the self-trust that you need to be able to sort of have the belief and trust in yourself to do the right thing at the right time when you're trading. So we, identified over these last few sessions that, that we can have these 10 steps, which are simply keep you on the right side of the market and ensure that you're doing the right thing at the right time. And, the good thing about the Mastering the 4 M's of Trading webinar series is that, all of the sessions have been recorded. All of them are available on the Admiral Markets YouTube channel or on the Admiral Markets Global Facebook page. So, if there are particular areas that you wish to recover or particular areas you wish to dig into more depth, then by all means just access them. They're all there to help you, and they will help develop your own skills to be able to master the 4Ms of trading. So if you remember, every week I go through it quickly because I'm very keen on the more you hear it from me, the more it becomes your own routine, your own process. So whenever we look at a chart, okay, the first thing we're always going to do is define our levels of support and resistance. Step 2, then we're going to define if there is a trend in place at all. Step 3, we look to see how price reacts at those key support and resistance levels. That requires a little bit of patience because then we're looking forward to see what, if any, particular price action signals show up at those support and resistance levels. And we want to understand, is it part of a bigger chart pattern? So that's the first sort of 5 steps. They're pretty much based around the sort of technical analysis of looking at a chart and being able to start to develop a picture, to build a picture of what's going on and be able to identify some entry points. Then we have, the back 5, okay, which is step 6, risk, define your risk, accept it, stick to it. Step 7 is remember, the flip side of the coin is about rewards, okay? It's about recognizing whether you're going to use targets or a trailing stop and about how you need to know your exits. Step 8 we talked about was about recording, okay? Make sure you keep scrupulous records of your trading because it allows you to conduct step 9, which is about reviewing, and you improve your performance by debriefing your trades. And I can't stress that enough to you, ladies and gentlemen. Step 10 is all about repeat, okay? It's about eat, trade, repeat. Eat, trade, sleep, repeat, okay? It's about having consistency and discipline. Very difficult to be consistent without being disciplined. Very difficult to be disciplined without being consistent, okay? They back each other up and they support each other up. And by doing that more and more, it becomes, as I say, you're creating good trading habits. And that's what I was hoping that, would be one of the many outcomes that we will take away from the Mastering the 4Ms of Trading webinars series. So, what we talked about is that, we're going to create, a certain number of profiles that would allow us to sort of build that routine, engage in that process. We said, as we worked into it, we would look at the dollar index and then the 28 major FX pairs, and we'll do that last because we've covered quite a lot of FX pairs as we've gone through the session so far. We also want to look at indices, and indices, we will touch a little bit upon that today, but we'll be doing a session just primarily on them. If you remember, ladies and gentlemen, last week we looked about setting up a commodities profile, just making sure that we could develop our analysis on oil, both Brent and West Texas, looking at gold, silver, palladium, natural gas, platinum. You also have equities, and that's actually what we're going to focus on today, okay, looking at what some of the people will call the FANGs, Facebook, Amazon, Apple, Netflix, and Google, and also your other own personal favorites, the ones that have been in the news a great deal recently, things like Tesla or Deutsche Bank or Cisco or Boeing. And then we'll also look in one of the future weeks, we'll have a look at building our own crypto profile. The Admiral Markets offers the opportunity to trade things like Bitcoin, Ethereum, Litecoin, and Ripple, and we'll be able to build a profile from it. But today we're going to look at equities, okay? We're going to look at building our own little equities profile that we can utilize to help us, follow those 10 steps and be able to identify, trading setups for us. So, if you remember very quickly, I always go through it. That step 1 was define levels of support and resistance. So when we look at a chart, monthly, weekly, and daily charts, we start to draw in horizontal levels of support resistance, also using psychological round numbers. And we can also use fractals, which I have on my chart to help. Step 2, we want to define if there is a trend. Remember, I keep saying good trends will leap off the chart at you, okay? If you need to force it, okay, looking at a chart, force it to see if there's a trend there, I assure you the trend probably isn't there. Good trends leap off the chart at you. Step 3, okay, wait to see how price reacts at that key support resistance levels. And what does that mean? That means we're actually looking for a confluence of events. We're looking to see how price, what it does at key levels, which leads us into step 4. Okay, remember, we're looking for particular price action signals at those levels of support resistance. And, we've covered that quite consistently, okay? We did a good series of weeks over the individual price action signals. We looked at pin bars, we looked at engulfing candles, inside bars, 3-bar reversals, key reversal and momentum reversal candles. We looked at key day reversals and the combination of that working with a 1, 2, 3. We looked at a simple sort of reversal signal in terms of the power of the 20 moving average, and we also looked at 1, 2, 3 patterns. So remember, if you're still trying to understand them, you don't really fully grasp all of those particular signals, well, go and have a look in the webinar archive, as I say, on the Admiral Markets YouTube channel and also on the Admiral Markets Facebook, Admiral Markets Global Facebook page. You'll find them all there, and you can go through them individually and start to understand them and develop them for your own particular trading ideas. Step 5, remember, we're looking about general chart patterns. What is price actually building a particular chart pattern? And we looked at things like continuation patterns, like bull and bear flags, ascending and descending triangles, and symmetrical triangles. And we also looked at reversal patterns, head and shoulders, double top and bottoms, triple top and bottoms, and things like cup and handles. So, there we covered that in this kind of, as I said, the first 5. And that's what we're going to be focusing on a little bit, okay, to begin with, as we build our profiles. In future sessions, what we'll look is we will come back to looking at the myself element, okay, in terms of managing performance, how we come back, had a little bit of a trading slump, or we're, off our edge, and also how do we go about improving performance. And as we go later through the year, we'll be looking at things like shorter term trading tactics, and also just some advanced trading tactics based around the particular setups and price action signals that we covered at step 4. So as always, before we just switch across to the charts, remember, you're always looking to manage those 4 M's of trading, ladies and gentlemen: markets, methods, money, and myself. Just check in with yourself. Are they all in alignment? Are you mastering them at the moment? Are you managing them well? If not, well then, don't expect outsized returns within your trading. It's important for you to constantly monitor those 4 particular areas. As always, if you're watching this now, or if you're watching this on demand in a few days, and you have queries or questions about either, what we discuss or the Admiral Markets offerings, then by all means get in touch with your account representative. You can call them on that London number 020-772-64003. You can email them at hello@admiralmarkets.com. And as I said, you can check out all of the webinar archive from all the previous Mastering the 4 M's trading webinars on youtube.com/Admiral Markets or facebook.com/Admiral Markets Global. So if you just bear with me a second, we'll just switch across to the charts and have a look at setting up an equities profile. So here we have the Admiral Markets MetaTrader 4, okay, that provides us with quite a wide range of instruments to trade, as well as also as the Admiral Markets MT5 platform provides. So this is the S&P 500 daily. Okay, we're gonna come back to that in a moment, but first I want to just start to create the profiles that we talked about. If you remember last week, okay, in last week's session we looked at commodities, and just as a switch across to that, we have that there as that profile set up now, just on the automatic auto trading. And if you remember last week, we covered it, we talked about it, we set it up, and we looked at it. We've got a commodities profile here. We can check. Okay, we've got gold, Brent, West Texas, silver, palladium, platinum, natural gas, and then also the dollar index, because commodities are priced in dollars. If you remember last week, we talked about how Brent and West Texas, we talked about how we thought that price was setting up a bigger chart pattern. Step 5, okay, we were looking at a symmetrical triangle, and we can see that that has broken out, especially there on West Texas, okay, after sort of being in a nice triangle in an uptrend. There's a continuation pattern. Prices continue to move on. We looked at palladium. Okay, palladium there, we talked about how we thought palladium was setting up as a flag pattern, and we can see that price has broken, and actually it's carried on, and today has been a very positive, bullish day for palladium. So, when you have these set up, you can very, very quickly just, take a snapshot of what's going on within that particular asset class, and gives you just the ability to build that picture, build your situational awareness about what you're particularly looking for as a trader. But today, as I said, we're going to set up as equity. So, here's just a way to do it on MetaTrader 4. A pretty quick and simple way is that, what I can do here is Just brought down the market watch here on the left hand side, and I'm going to go through looking for the sort of major equities that I want to see. Remember, we talked about FANGs and then about having some of the other popular ones. So if I go down here, okay, we can see that we've got here them. You can see them with their tickers. Just remember that when you're trading some of these equities, there's a 15 minutes delay on the chart on the feeds. Okay, that's just to be aware of, but that still allows us to trade, because we're going to be looking to begin with to actually looking trading on a sort of the longer term time frames. Anyway, sort of that was our particular plan and the way we are looking to operate. So with this profile here, here's what I'm going to do just to make it quite simple. Remember, I want to look at the FANGs. So I'm just going to drag here. We can see FB, Facebook. Okay, I'm just going to drag that into my gold chart here. What was my gold chart? And then I'm going to go for here we go for Apple. Okay, I'm going to have that across. Just drag that in. Amazon, I want in there. Okay, and then I want Netflix, don't I? So there we go. Netflix can just go in there. Then we want Google. Okay, so we've got Google into my Palladium chart there. So then then I still have a few elements I can look at. So as I said, Tesla's been of interest, okay, recently, and what we've also had here is a bit of an interest in various different types. So we have access here. Deutsche Bank is one that's been in the news a great deal. So I'm interested to have a look at that. Also, we'll just scroll through and find a few of the more interesting ones. One I wanted to have a particular look at was, here we go. We've got Boeing, all right. So, of course, Boeing has been in the news a great deal at the moment, so it gives us an opportunity to basically take a little look at that as well. So very quickly, I've just sort of added in some equities. Of course, I can add more, okay, and I might do as we go through, okay. But to begin with, we just have that, and now I want to save that as a profile, all right. So I'm just going to go up here to Profiles, save my profiles as equities, and there you have it. Now I have an additional profile just set up that gives me a look at my equities. So, as always, let's just start with Facebook, as we did last week. So, with commodities, here's what we're looking at. Okay, as always, this is just starting with a monthly chart. Remember, our chart setup are pretty simple, pretty easy. We've got green bullish, red bearish candles. You may choose different colors, but just explain there to see how they operate. We've got a 20 period moving average, red 50 period moving average, and will also be a green 200 printed, okay, on the lower time frames. And what we can see here is I've got the fractals here, okay. So remember what we're just talking about is that invariably once we start opening a chart, I want to just basically start drawing on levels of support and resistance. So I'm interested in looking at extremes, or just looking at the charts and seeing where there's particular areas where price there's been a reaction. And that's what I'm sort of curious to look at constantly. Okay, also looking at big round numbers to see how that how price reacted there. Okay, if I just change that to it's about 103. Let's just have a look at how how price reacted there at 100. Okay, big round number there. Okay, and just drawing that in. Okay, remember just starting with on the sort of monthly charts. As I said, I want the extremes. Okay, just to remember, because markets remember this, because markets, even with algos, are still made up by humans, and humans remember particular levels. The weekly chart, okay, I'm just going down and sort of having a good deal more look at it, and what we can see here is, as always, is we've captured a lot of the levels, but I'm hoping you can see very, very clearly there, okay, that the fractals, which you can see, are just confirming that price was just up in a very, very nice uptrend, okay, up till around about July, okay, July of last year. You can see that we're getting higher highs, higher lows, higher highs, higher lows. The 50 period moving average was acting as very nice dynamic resistance, okay. We had the 20, then the 50, okay. Then what we started to see was the first real break beneath it, the last push up, and then what we had here was this, what was this particular candle pattern? Well, on the weekly chart, this was a key day reversal, or key week reversal in this particular case. Price pushed to new highs, okay, then collapsed, rolled over, and collapsed and closed beneath the low of not only the previous candle, but actually the previous candle of about the last sort of what, say 2 to nearly 3 months beforehand. That was an indication that that uptrend was over, right? And what we've seen is just the way prices reacted from that. And if I just look at there, okay, just zooming out there, this is an opportunity for us to draw that sort of trend line there, okay, and there's a supporting trend line. It's pretty, you can see that it stands out pretty clear, and you can see that it was, price was in a pretty good uptrend, pretty clear. Remember what I was saying earlier is that good trends leap off the chart at you, okay. You don't have to force it, but of course, I'm curious now, okay, with Facebook to see how price, as I said, it rallied up, put in its key reversal, it came down and broke that trend line, got down to about the weekly 200 here. It looked as if we might continue down, but actually sort of we rallied back up. And hey presto, where are we? We're just, what they're doing, kissing the trend line, okay? Kissing that trend line where, where it was before it was support. Now we're looking to see, is this actually going to be resistance, okay? Remember what we're looking for. We're looking for a confluence of events. We're looking for particular price action signals at, at or around levels of support resistance or particular significant areas and levels. And I'd be, just adding in another area there, okay, that I would be interested in. And you see we had a bit of a rejection candle there, not a particularly great one there. Last week, okay, we tried to push to a new high, and we did close much lower and very bearish, but it wasn't a key reversal. It was more like a bit of a momentum reversal. And we can see today we've already sort of gapped down on the open there. So keeping an eye on that. All right. If I go down to the daily chart, we can see that we actually had a bit of a gap there. Okay, a gap there which gapped up, and we'll talk about gaps in more more depth in one of the future sessions when we get to advanced trading tactics. But as a general rule, nature abhors a vacuum, and so whenever there's a gap in nature, nature will look to fill it, and it's the same with trading. When there are gaps, the market will look to fill it. So that's an interesting. Facebook is an interesting area there. Okay, so it's something we add to our watch list to take a look at, and we'll be looking to see whether there's an opportunity for will there be a continued short back down to that weekly 20-period moving average, which is around about 150. Okay, big round number. And then we'd be interested to see how would price react there. Will that power of 20, okay, act as dynamic support, okay, before another move up, or will it slice through and continue down to the 200? So we're going to be keeping an eye on that. So there you go. There's Facebook. Very quickly done. Okay, Apple. All right. Well, of course, Apple's been interesting. Apple's been all over the news. Okay, both in both good and bad ways. Okay, in terms of how it's operated, but it doesn't really make that much difference to us because literally, as I say, we open up the charts, all right, and we're just looking at drawing in our horizontal levels of support and resistance. Okay, the fractals can sometimes help give us an indication of possible areas of interest. That's what we're looking for, because we know how we expect how price to react when it returns there. We can see there's just some there. And what I look at here, okay, on this chart here, that's the monthly chart, is that we had it was a head and shoulders pattern there. Now, of course, there was elements of just maneuvers and stock splits, okay, but it really just looks like a head and shoulders pattern there, doesn't it? That we sort of reset, okay, and actually price is just based and it's been drifting up, but you can see there over the last few months it's actually had a little bit of a downturn there. And if I go down to the weekly chart, we can start to sort of draw in, as I say, additional levels. Okay, just always curious on what the extremes are. Once again, we can see that a bit like Facebook was. You can see that price on the weekly chart was chugging away and an uptrend. It got past that weekly 200. Okay, the 20 was above the 50. It was chugging away. You can see that the 50 was acting as dynamic support. Okay, and it was just prices making higher highs, higher lows, working its way up. Then we had, effectively, what looked like in hindsight was a bit of a false breakout. Okay, before we sort of collapsed towards the end of last year. We collapsed, and now we've had a little bit of a rally. Okay, and here we are up and around about that sort of 187, 188, where we are. What's here but the 50-period moving average. So once again, okay, I'm adding that to my watch list. Here, the 50-period moving average was acting as dynamic support. Now it's, could it be dynamic resistance? Could we get rejection candles, and would that give us an opportunity for a short down to the to sort of that lower region when the 20 period is about 170? So if I just go down to the daily chart, we can see we're getting close up to that sort of even that daily 200 period moving average there, right? Had a nice sort of inverse head and shoulders there, okay? Left shoulder, head, right shoulder, and then a drift north. Be interested to see is could we push to the daily 200 before then, falling away back from it. So once again, it's added to my watch list. I'm going to keep an eye on how this plays out over the next couple of days. So that was Apple, and let's have a look at Amazon. Well, as I say, good trends leap off the chart. This is the monthly chart, and you can see that was just great trends there. Okay, great tech trends, and as always, I'm just going to draw in the recent highs. Okay, the real lows there. Okay, I just want to constantly just draw in those levels, going down from the monthly down to the weekly, and then down to the daily if need be, just to in order to just work out the extreme areas, okay, work out where those orders will be, so that I'm in a position to sort of take advantage of them when price returns to those areas, whether it be in the next 24 hours, or the next 24 weeks, or the next 24 months. Okay, that's what we're here for, to build that picture. So, kind of interested to see, quite a few fractals there, right? There's a few fractals there around about that. So what's that? Around about the 1700 to 1750 zone, okay? We can see, it was a nice uptrend on the weekly chart, wasn't it? Then we had a bit of a double top there, okay? Double top there, a bit of a scruffy one, not necessarily a clean one, but a double top followed by the fall away, all right? And fall away, and now once again, we're back up to around about that 1740 area, which is also where the weekly 50 and the weekly 20 are all about as well. Okay, so once again, just keep an eye. We're at an inflection point here. If price gets above it and holds, well, then could it make another assault on those recent highs back up around about 2040, or will it roll over here and sort of just drop away back down to that 1310 zone? Okay, just in front of the big 1300 number. So once again, we're keeping an eye on it because there's lots going on. If you look at that in particular, I'd be looking at that here, on a, let me just make that a little bit different, okay? I'll be looking at that, we've been just looking at a, bit of a range there, okay, for most of, 2019, really, after the start of the thrust up, we've actually just been knocking about there, okay? The daily 200 is acting as nice resistance. We can see today at the moment, okay, that it's looking like it's just trading above it, but I'll be interested to see will it hold above it, or will it just reverse and fall down. So we'll keep an eye on that. We've got lots to add to our watch list at the moment, okay, just to see what actually is available for us. So that was so we've done Facebook, Apple, Amazon, and let's have a look at Netflix. Okay, you know what the score is, what the rule is by now. Okay, start with the monthly chart. Okay, draw in the extremes. Okay, just to give us an idea of where those edges are on the charts. Start to draw in where we see particular significant levels of support and resistance, where there's lots of areas being touched around. Okay, so it's just typing that up. Okay, just drawing that in, because we know that price will want to know those levels, and we'll continue with the weekly chart. Okay, if you go down to the weekly chart, it was just Netflix was throughout 2017. We can see that it was making higher highs, high lows, it's grinding its way up. First part of 2018, it actually just drew its way north. It drove its way north rather. It actually was just going more and more. And we've talked about this in the past. Once you start seeing price going almost vertical north, parabolic, that the end is not too far. There we had a nice double top there. Okay, nice double top there before price fell away. Okay, it tried to put a key reversal in here and tried to pull up, but then actually it got finished with another key reversal there. And actually we can see that price just dropped away from that. Okay, price just dropped away down there. Okay, got towards the weekly 200, didn't touch it, but then we had another rally, which is what we're seeing across the board. So at this level, we're up to around about that 370 area. I don't see it in the same areas as the ones we've precedingly looked at in terms of it's at a particular inflection point. I just think that it's back up to around about that 370 price area, and that's what we're going to be keeping an eye on. It's it's there. It's the uptrend. It's above the 50 on the daily chart. it's kind of above the 200, but a little bit like I'd say, after a strong start to the year, it's just been grinding its way there, okay, and I'd be saying it's actually sort of bouncing between about 365 and 335, okay, it's just bouncing around there. I don't see any particular patterns at the moment. We've had a little gap up and maybe a rejection forming there. But, we're just going to keep an eye on that. There's no real trade for us there at the moment. We're just, just as I said, we're just building our profile and building our picture to begin with. Let's have a look at Alphabet or, Google, so we'll start. Here we go. Let's just get rid of those for the moment. You can just draw these in where they are. Go to the extremes on the monthly chart. That's where we can start. Where we can start to build a picture. That's what we're interested in. Just keep drawing those in. Just looking for particular areas where we think that there's a bit of movement going on. Okay, you can always tighten it up when you go. It doesn't have to necessarily be perfect to begin with. Okay, you'll find that it will, as you look at your charts more and as you work at it, you're going to tighten it up anyway. You'll find that that's just a natural thing of looking at these charts here, all the time, that you start to have an idea of what's going on. And then weekly chart. Okay, it's the other charts, they've been in a nice uptrend the last few years. You can see that yourself. It's been a bit scrappier than the other charts, but once again, we got up to around about in the middle of last year, right? Then we put in what you'd be looking at there as there's a little bit of a double top there. Price rallied away, and price has now come back up. And just a little bit like the Netflix, it's above the 50-period moving average now on that weekly chart. It's trying to move its way up. I'd be interested to see whether this could be left shoulder, head, and right shoulder. So we'll be keeping an eye on that. We'll just see, what might actually come of that. We'll just draw that in there. Is that a case? Let me just talk about here. Let's just draw it on here, just so you can see. For those of you, I appreciate we've got a broad range of experience and talent in the room. So let me just do that. There we go. We'll have a look at that. Just draw it in here, something we can always keep an eye on and come back to. And let's just see if that's there, and then would be our head. Okay, so there we go. So you can see that's an indication of what's Alphabet's doing, and just taking a look at, is it going to actually reverse here again? If it reverses, well, then we have a neckline, I'd say, down at around about the what would we call that? Around about the kind of 990, okay, 990 area. I'll be looking at that as the neckline. Okay, so even as an intermediate trade, if it was reverse here to go down from there, from 1180 down to 990, that in itself is, it's nearly it's a big move. Okay, it's a good sized move there. Okay, so we just add that to our watch list, don't we? We just keep an eye and see how that actually plays out. So was Alphabet or Google. Tesla, well, Tesla monthly chart. We've talked about this on previous sessions for Mastering the 4Ms, just as an idea of understanding the difference between range-bound markets and also about trending markets, okay, and just being able to sort of see when they're, as I say, very clear in the sense that when markets are trending, it's very clear and it leaps off the chart at you. When it's also when they're in range bound, it's also quite clear as well. So we can see here on the Tesla, on the monthly chart, that we actually just move my charts around a little bit. We really were bouncing between about 180 to 280, okay, here for a good few years. We broke out of that, and then we started to just form a new block between about 380 and about 280, 270. And we can see that that's what happened. Okay, 1 month we get good news, next month we get bad news about Tesla, and you can see for yourself it's been bouncing about back and forth. At the moment, we're back down towards the end of that block, so it'll be interesting to see, is this a case of there'll be buyers here waiting for it to at the bottom of its range, or is it a case that the sort of the news that's been coming out of Tesla has had sort of traders and investors a little bit skeptical, should we say? Go down to the weekly charts. Let's just just draw in a few more levels where I can start to see there's plenty of fractals and areas that are of interest. We can see that it's just really since 2017, 2018. There was sort of big scruffy years there. Okay, in terms of just bouncing between those ranges, no real clear sort of movement or opportunities. Now, we're back down, at the moment this week, okay, we're pushing down beneath that weekly 200, so we'll be interested to see at the end of this week, can it actually hold there, okay, can it hold beneath it, all right, and that's what we'd be particularly looking for. If it does, well then, of course, then you're just looking at it moving back down towards that sort of 250, 245 area. So not really a trade for us there at the moment. It's more about just understanding, the picture of Tesla, and you can see it, across social media. You can see the sort of the people who are absolute, sort of deeply in love with Tesla, both, as a stock and as its products. But then also there are the skeptics. Excuse me. There are the skeptics as well. We need to sort of keep an eye on how they do at the moment. They're the ones sort of pushing price down from 370 to 270 there. That's what we've seen since the end of last year. So, let's have a look at, this is Deutsche Bank, okay? It's been one thing I've talked about it in the past. I've talked about it on the real-time daily trading ideas, which is what I do on Tuesday mornings, 10 o'clock London time. You're always welcome to join me, because that's where actually I just show, what we talk about in the Mastering 4Ms is what I'm actually doing day to day in the way I look at charts and start to identify my trades. And hopefully you can see that, this is the monthly chart of Deutsche Bank. And, this is fascinating in the sense that, back up here in 2007, we were up at around about 115 price. And now this year, okay, we're averaging around about 8. Okay, we've gone from 118 to 8. Okay, we've lost about $110 worth, 110 euros worth of price there. And you can see there's been a pretty miserable sort of experience. We'd be saying that is almost like a descending triangle that's forming. Okay, we've had that. Okay, we've broken through it and we've just sort of dribbled our way down there. You can see that on the monthly chart there, it's very clearly in a downtrend, right? And we've reached all-time lows there. Okay, about end of last year, start of this year. If I go down to the weekly charts as well, okay, it just basically confirms that particular story that we've talked about. Okay, you can see that that those trade ideas have set themselves up. Counter trend line trades have we've had a few setups from them as prices tried to rally and then collapsed its way back down. Okay, and we've just had you can see sometimes where we've had bear flags as well. Remember their continuation patterns. Okay, and how they work and operate. And at the moment, price is just having been as what was the low we got there? Okay, as low as 667. Okay, we're back up at about 8. So it's for the year it's done well, but relative to its performance over the last few years, we can see that Deutsche Bank is very much in a downtrend, and we'd be looking at that. Of course, we're interested in it because we've seen rumors about the perhaps merger with the Commerzbank and perhaps one other German bank as well. They're going to try and sort of save it that way. So, of course, that will have an impact upon the share price. So, we'll keep an eye on it. We'll take a look at it. So another one, Boeing. Okay, well, Boeing has been in the news recently. Okay, for the wrong reasons, mainly to do with recent crashes with its 737 Max. And if we look at the sort of monthly chart here, once again we can see that we were on a nice uptrend there. Okay, from in the last 10 years, okay, from lows down here, right at $29, we have been as high as $445. So over 10 years, if you were a long-term investor in Boeing, well then you've done very well. Okay, and you'd be very happy with with yourself. But if you if you only just come to Boeing recently, well then perhaps you wouldn't be as particularly happy as some of the other traders and investors in it. And we'll look at the chart patterns there a little bit more. I'm just going to draw it. It hasn't formed a fractal there because I need 2 more candles after it, but we can see that has been the high that it has been. And if I go down to the weekly chart, we can see, that remember what I was saying, that when a chart's in a good uptrend, it's very clear. Hopefully you can see that it is very clearly in a trend. And then last year, what we saw was that, it's actually a bit of a block there, okay? Once again, I'll be saying that that's a bit of a block for us. Let's just do that. Quickly there, we can just see that it was just blocked out, okay? And it was just a case of we were in a block there, okay, tried to break out, but it came all the way back down to it. And then, we had a real rally to the start of this year, okay. End of last year, real rally, okay, new highs, but what we can also see is that it came off, and then as soon as we start to get to the news about the 737 MAX, things started to go a little bit wrong. If we go down to the daily chart here, we can see that, having pushed to all-time highs, you can see price went down, and then invariably what we had was the news about the recent Ethiopia crash. Price actually gapped down, so we closed here, okay, and then we opened. And oil price tried to rally up. It filled this gap, but it didn't fill the big gap, and then prices rallied down again. And here we are here, okay. Just looking at price here, down around about 370. I think 360, 370 is going to hold, but we don't know what other news is to come out of Boeing in terms of with how they're dealing with the issue with the 737 MAX. Just as a little bit of an interesting point, okay, for us as traders, I like to sort of show up indications, okay. So here we go. What we had was this great run here, okay, was we've been in a bit of a downtrend. Let me just put that on here, okay. We've been in a bit of a downtrend, okay. Price had been drifting down for most of the month. Then what do we have here? This is it's an engulfing candle. It's also a key reversal candle. Price pushes to new lows, pushes its way up, and closes. It closes above the high of the previous day's candle. As the buyers have stepped in, okay, in force, and they're looking to sort of take the trade. And then hopefully you can see that price drifted its way north. Suddenly it's north of its moving averages. Price is gapping up, and it rallies all the way up. Okay, and it's actually done really, really nicely. Okay, it's moved up there. Okay, over the period from approximately about 311 up to 445. Okay, it's about $135 move over a couple of months. Really nice move, nice nice uptrend, but actually it all came apart very, very quickly. And so there was no trade for me on here at the moment. I'm just watching this because it's there's sentiment news played, but I would be, if personally, I would think that if price were to get beneath that daily 200, then it wouldn't surprise me to see price rally down, fall down to around about the 300 level there. Okay, and that's the way we would we'd be looking. So there you go, ladies and gentlemen. We've just very quickly had a look through, some major equities there. There are more that we can add, but unfortunately, as always, we've run out of time a little bit. But now we have an equities profile, okay. And now once we took a bit of time going through the charts and drawing in those levels of support and resistance, starting to get a bit of an awareness of what those instruments are doing, looking at where we might be interested to start doing some particular trading. Excuse me. And now, what we have is just add that to our watch list, and then over the next coming days, weeks, and months, we'll be able to keep a track of that and actually be able to look at how how those equities are coming on. When do we get opportunities to take trades based upon the sort of following the step 4 that we touched upon, namely just being able to identify good price action signals that allow us to take good, low risk, high reward trades. So there you go, ladies and gentlemen. I hope you found that useful. I hope you found that insightful. Okay, next week we'll probably look at indices next week. Okay, so we've just done commodities last week. We'll do equities this week and indices next week, and hopefully that will help you build your picture about what the opportunities are for you out there using the Admiral Markets MetaTrader 4 or MetaTrader 5 platform. So just finally for me to say, as always, you can join me for the Tuesday morning real-time daily trading ideas, Tuesday morning, 10 o'clock, London time. If not, then I wish you the best of success in your own trading, and I look forward to you joining me next Monday, 4 o'clock London time, for the next installment of Mastering the 4Ms of Trading webinar. Thanks very much, guys and girls, and trade well this week. Boris Lava says, thank you. You're very welcome. Thank you. Thank you. That's very kind of you. I hope you have a great trading week. I look forward to speaking to you soon.